Hey everyone, welcome back to the Money Level Show where we think, act, and prosper. This channel focuses on changing financial trajectories and building legacies. My name is Daryl Thomas, and today we're going to talk through my experience at the New Orleans Investment Conference so far. And we're going to talk some of the things I'm learning in terms of inflation and about some of the commodities that I am even more bullish on. So we're going to get into it. I'm going to kick this intro real quick, and then I hope to see you all on the other side of this intro. Stay tuned.
Think. Act. And prosper. You are now tuned into the Money Level Show.
Hey everyone, we are back. If you are watching this, please drop a comment in the comment section. Would love to know who you are. And also, if you have any questions, feel free to ask those questions. And so we're going to talk a little bit about my experience here at the New Orleans Investment Conference. And honestly, my initial reaction is it's pretty good. I mean, I'm meeting a lot more people. There's more people here than that was at the Rural Symposium. Hey, what's going on, sis? Good to see you. Good to see you. Glad you're here with me today. Um, so there's a lot more people than at the Rural Symposium, which I mean is good and bad. I mean, obviously, at Rick Rule's Symposium in Boca Raton that I was at in July, that those were companies that Rick actually invests in, and so the people there it was like more quality over the quantity. Here it's like more quantity over quality, I would say, in terms of just who's here. Like, I mean, you just don't know. Anyone can be a sponsor here, so you just have to vet the companies that you talk to and such. And so it's just a different experience, but there's a lot more people here. So I'm able to connect and network a lot more, and meeting a lot of different CEOs of companies on the Toronto Stock Exchange, the New York Stock Exchange, and many others. I'm actually interviewing one of the directors or presidents of a company that I invest in, Sandstorm Gold, tomorrow, which is pretty cool. You know, I've been investing in them for a while. Tomorrow I get to interview the president of the company. So that's pretty, those are some of the experiences I'm having. I'm learning a lot of new things, especially when it comes to the geology of precious metals and just mining and mining materials. As you all know, that I am very bullish on mining and materials, because we have not invested in our infrastructure and in our materials in a long time. And we've given a lot of our production over to other nations. And now we're seeing, with the rise of wars and the rise of conflicts and geopolitical risks, that we're like, hey, we need to have our resources back. So I've learned a lot just from, I mean, last night I had dinner with Brent Cook and Tony Retta and Pete from Tectonic Metals, and Brent Cook is a geologist, well-known geologist in the natural resource space, and just soaking the game up. A lot of the stuff they say goes over my head, but I'm just soaking the game up here. So it's been exciting. So I want to jump into some things that I've learned today. I was just at a workshop with George Gammon, and he did give us a mind-bending some charts to look at, and so that's what I want to look at today. So we're gonna pop over to some of these charts and kind of just look at what causes inflation. And so this is what George Gammon challenged us to think about and reconsider. What causes inflation? So we're going to jump over here first. Boom. This is a chart of the U.S. debt to GDP ratio. So GDP is the gross domestic product um, of the United States. So when they add up all of the goods produced in the United States, this includes the exports minus imports, like how much goods did we export to other countries, like how much did we sell to other countries versus how much did we import, and how much did we produce. And so this just shows the debt. So the debt to GDP, as you can see, whenever this rises, this means that the debt is a significant amount of the gross domestic product, which means it's a significant amount of the amount of goods we produce as a nation. So when you look at the different time periods, so obviously you had the Civil War, where the debt to GDP was headed towards 50%. It was at what 32%, 33%. So that means that whenever we go to war, we're printing more money and we're accumulating a lot more debt. And that creates a big percentage of our gross domestic product. So pretty much 30% of our gross domestic product, our debt to GDP, our total debt was 30% of our gross domestic product. Then you go to like World War One, we go up again, 35%, right? So that's pretty much how it works. Sorry if this is confusing for some of y'all. Just bear with me as I explain it. Then you get the banking crisis of 1929, as you can see, 1929, June 1929. You get the stock market crash. This was during the roaring 20s and such, and then debt skyrockets. We have the Great Depression, and then we go into World War II. This is June 1941. June of 1941. We go into World War II, and the debt just skyrockets. So the debt is then 121% of the gross domestic product, which means that you have your gross domestic product, and then you have your debt. So the debt is twice the amount of the gross domestic product, like twice the amount, and at least twice the amount. So 100% would mean like, okay, our debt is 100% over the amount of products that we produce. So you have, say like you produce $1 trillion of product, the debt is 100% over that. So that's $2 trillion, but this is like here is 121%. So it's higher than $2 trillion. And that's just an example. That's not the actual numbers. And then as you can see, it just goes down. The 70s, we had a lot of issues, interest rates, inflation, debt to GDP rises again. In the 90s, Bill Clinton gets in office. We actually start to have a trade surplus. So the debt to GDP comes down. Then you have 9/11. Almost said 1911, like my 45. No, 9/11. And you begin to see the debt to GDP rise again, right? And plus the global financial crisis. So now you have the pandemic, debt to GDP got up to 132%. We haven't seen this amount since World War II. World War II is a little bit less. And then now it's a little bit, it's actually higher than this now. If we look at the national debt clock, it's higher. So it says it's at 119, but that only goes back to, I think, May. So if we go to the national debt clock, you can see that the debt to GDP ratio is now 124.43%. So this is hey, what's going on, Cito? Good to see you, buddy. Hope you're doing good. Truth hits like a bullet. Have you read the book I told you about, Banking and Finance? No, I have a lot of books right now, and I have not touched that book yet. That's probably like a long ways down the line, to be honest. I have a lot of books to read. 500 pages, 300 pages, 200 pages, 150 pages. It's so much to read. And then I'm doing my master's degree on top of that. So yeah, I have not read the book. but I'm actually gonna take this down and put it on my list. I just probably won't get to it for like another 2 years or something. I'm just being honest. Everything is inflation and deflation. USA Today only gets 3 trillion in taxes. We spent 6 trillion in deficit spending. COVID, we had 9 trillion in deficit. In 2008, we had 75 trillion. Eustace Mullins read 10,000 pages a day. Well, I'm not Eustace Mullins, so I'm me. So, and I'm not reading no 10,000 pages a day. So, yep, I got other priorities. But I will read. I'll get to it when I get it. If it interests me, I will take it down and stuff. Appreciate the reference. So, so we see the debt to GDP is 125%. So what George Gammon was telling us in the workshop was about, oftentimes we associate, I couldn't find the exact chart. He had the M2 money supply versus inflation, and he also had, I thought it was a GDP in there too. But he talks about how, I mean, obviously this seems very correlated in a lot of ways. Where you see these lags between them. So you may see M2 money supply go up, boom, inflation goes up, and then inflation comes down, M2 money supply goes up. So you see the correlation in the charts, how they interact with each other. And then obviously recently when we had the huge amounts of money supply growth, and then we had that inflation spike. Now money supply is retracting and inflation is retracting somewhat. So he goes and he shows like this. He talks about gold bugs, pretty much would say that, okay, increasing the money supply, pretty much he was talking about how what helps not create inflation, like what creates inflation. And he talks about, like, does the gold standard actually put restraints on fiscal policy or fiscal government? And he argues that it doesn't, because as you can see here, if we would have had a gold standard, a lot of people believe, even including myself, I mean, I'm just learning this, but a lot of people believe that the M2 money supply would have been retracted, because gold would have pretty much restricted government from spending as much, because we couldn't spend as much as we had in gold. But George goes back to the 1880, and he shows a chart, which this isn't the exact chart, but he shows how the M2 money supply was still going up then, and this was a big era where the gold standard was pretty much the golden standard. And so, and he shows, like, it's still the same, like the money supply was still increasing drastically, even being on the gold standard. Like, that did not stop politicians from printing money. So then we got into inflation. So let's see, got a couple comments. I've been trying to read Human Action, von Mises, for 3 years. Yeah, it kind of just depends. It depends on, like, your goals with reading the books. I mean, obviously educating yourself is important. Some people are going into college professions, and it just depends on your interests as well. So it's a lot of work. Truth is like a bullet. It all depends on the reserve status of the dollar. 68% today use the dollar in a reserve and 60% use it as exchange for goods. At the early church, that was 80%, around 30%. Gold back to the all-time high. Debt to the US dollar. Gold needs a repricing. Gold to 61K an ounce. I'm trying to be a doctor right now, but right now I'm doing law. Yeah, that's a lot of work. So, a repricing. I actually asked, I recently asked someone about this, and they mentioned that I think it was Alistair McLeod on a recent interview, and he had his take on it. I'm still doing kind of my research on that, repricing the gold. But yeah, so governments keep spending, right? And this was pretty interesting. So George shared this exact chart, which shows the total government spending and revenue as a percentage of GDP. And we saw this chart, but has more color, and it has federal, state, and local expenditures. And as you can see, Civil War spike in percentage of GDP. Then you get to World War II, we get a spike again, right? Then you get to World War One, then World War II, you get another spike, and then you get the just the government spending throughout this whole time, this whole decades, right? You had that dip in the 90s where we actually almost balanced I think Clinton almost balanced the budget, and we actually had a trade surplus, and then we went into 2000, 9/11, and as you can see, I mean, the chart stops at 2018, which I'm sure is a lot higher now. I mean, based off the U.S. debt clock and the debt and deficits. However, so looking at this, does fiscal spending by the government, whether that's entitlements, military, all these things, does that create inflation? So we're going to look at this is kind of interesting. So look at the shape of this chart and look at the shape of this dollar chart. So this is the Federal Reserve Act created. This is the value of the dollar. As you can see, here was the war around World War II. I mean World War One. So a little bit before 1920. Value of the dollar decreases. This was as we had a spike in total government spending as a revenue percentage. So we had that spike, right? And then you get here, obviously, you have the Great Depression and such. And then during the Great Depression, and then you have World War II, which is around this area where you begin to see the value of the dollar collapse again, which shows again over here, right? This spike here, government spending. And then you can see it here, how it's affecting the dollar. And the dollar just continues to go down. However, but like when you look at this whole chart, right? And if you were to, let's say flip this upside down over this chart, pretty much fit. I mean, here we would have to go here around this time. Dollars created, the first big dip, it comes back down, dollar, comes up some, here. Then you get the World War II, the dollar goes down. And then, it can almost fit within this same chart if it was flipped upside down, which is pretty interesting. Just going to show that again so you can see the shapes. It's pretty interesting when you look at it that way. Let's see. Truth hits like a bullet. Because total debt is 450 trillion and only 271 in assets. Yep. So I did the math, and that debt to asset, we need a gold price of 44.5K to back all the debt. I believe the debt is higher. Yeah, I mean, if they're going to reprice it, I mean, I'll definitely be a beneficiary of it. I just don't know what they're going to do. In 1909, they had the Gold Standard Act, which pegged gold to 90% of its weight to $1 back then. A year was 4K, which meant the current price of gold, that $8 million got ripped off big time. So yeah, appreciate you. Truth that hits like a bullet. Truth hits like a bullet. But yeah, so you can see like the correlation, with the chart of government spending. So government spending definitely decreases the value of the dollar. Um, because this isn't production, right? This is debt to production, right? This isn't like the private sector coming in producing a lot and such, and I mean, this is like a huge amount of percentage of spending and revenue as a percentage of GDP. So like, yeah, this isn't good. So that was kind of interesting. George Gammon, showed that and stuff, and I was pretty interesting. So I just wanted to share that. Time's been pretty good. I've connected with Brent Johnson, got to chat with him a little bit. He's hopefully coming on the channel. Connected with some other media influencers. Kai from Soaring Financially is here. Got to meet him, as well as Investing News in Charlotte, who's at Investing News. And I've connected with a lot of different companies. And so I do want to talk about a couple of things in terms of gold and uranium. There's a lot of uranium bulls here. There's a lot of gold bulls here. There's a lot of gold bugs here for sure. And there's a lot of charts that showed that gold should be going higher. Adrian Day had posted a really good chart. I have it on my phone. I don't have his slideshow. I took a picture of the slide, but let's see. He mentioned how the long and variable lags between when the Fed hikes rates and when recession starts. So let's go ahead and go. We're going to go through this. So I don't have it. I'm reading off my phone. So 1968, November 1968, the Fed starts to hike rates. In December 1969, the recession starts. That was a 13-month lag. All right, then you got the Fed rate hikes in February of 1972. The recession didn't start till November of 1973, so that was a 22-month lag. Then you get to the Fed hikes rates in February of 1978. The recession didn't hit until January of 1980, which was 24 months. Then you had 1980, August of 1980, and then recession started in July of 1981, 12 months. Then you had March of 1988, which is the month and year I was born. And the recession didn't hit until July of 1990. That was 30 months. June of 1999. The rate hike starts. Then you have recession doesn't start until March 2001. That was 22 months. Then you had June of 2004, the rate hike start. Then the recession starts December of 2007. That was 31 months. And now we're at rate hike start at March of 2022. And currently 19 months have elapsed since the rate hike started. So that means that recession is likely still coming, and we're not out the woods yet. Gold performance during recession. Adrian Day shared a really good chart and showed the percentage how gold did during recession. So the November of 1969 to November of 1970 recession, gold itself was up 5.6%. And gold stocks were up 77%. Then you had November 1973 to March of 1975. Gold was up 78%, and gold stocks were up 44%. Then you had the January to July of 1980 recession. Gold went up 10%. Gold stocks were up 190%. and during this time, the S&P was only up 6%. And then you had the 1981 and 1982 recession. Gold was up 2.4%. Gold stocks were down negative 2.8. The S&P was up 14% during that year. The 1990 to 91 recession, gold was up 12%. Gold stocks were down negative 6%. The 2001 to November 2001 recession, gold was down 0.4%, and gold stocks were up 37%. Then you have December of 2007 to June of 2009, gold was up 23%. Gold stocks were down negative 5%. And then you have the February 2020 to April 2020, which gold went up 5%, gold stocks went up 24%. So from these numbers, it just shows that that gold is a hedge. When you're in recession, gold goes higher. You get gains. I think at the initial drawdown, gold definitely gets hit. With every other asset, we saw that in 2020, but it bounces back really fast. And so that was some good information of just like how gold protects you during the event of recession. So that was pretty interesting. Uranium, we got a lot of uranium bulls here. I'm going to be talking with Scott Melby tomorrow. I'm at the UEC and Uranium Royalty Dinner. So that's going to be pretty fun. I've also connected with Power Metals Resources. I'm interviewing Sean tomorrow. It's going to be fun. The price of uranium is staying pretty elevated. I have a video coming out with Capital Cosm, another channel that is big in uranium. Danny over there. So we just interviewed each other. I just interviewed him today, and we went over the charts and stuff. So we're going to be uploading that probably tomorrow. But Lobo Tigre, he spoke about he spoke about which assets he's bullish on for the year. And last year he said uranium. And he says he still likes uranium, but he's not as bullish on it as he was. But he really likes gold. And so, and he doesn't do predictions. He does projections, and his projection about uranium when he spoke about it last year around this time was actually turned out to be correct. So now he's saying that he's really liking gold. So hopefully gold does get more of a bid and hopefully breaks through all-time highs. So that was good. Now, this is an interesting company we're going to go through, excuse me, y'all. It's called Argentina Lithium. So it's Argentina Lithium Corp. All right. So I had a really good talk with this guy, which I'm gonna pull this up. Let me share screen. Cause I talked with him about lithium stocks. I was like, hey, they've been getting massacred. What's going on? He mentioned that a lot of the electric vehicles come out of China and such, and then China's slowing down, and not as many electric vehicles are being produced and such, and so lithium has been getting pummeled. So that's what he mentioned. So it's like, okay. And so, we were kind of getting into the weeds of why. So let me pull up a lithium price chart. And we're going to talk about, is there any investment opportunity here? And his company is pretty legit. And they had a quick pop there, as you can see on the chart. I'm just pulling up some other things so that you all can see what I'm talking about. All right. Boom. Let me go to news. All right, so let's see. All right, here it is. All right, cool. Just getting some stuff pulled up. All right, so as we can see here, I mean the stock, you know, obviously back in what it was $2 a share, 2018, pummeled, right? 2021, 2020. I mean, it shot up, skyrocketed. So um, they're based out of Argentina, and yeah. So we talked about some of the geopolitical risk, and he said they are in an election. The lady candidate seems to be in the middle, like half conservative, half liberal, and he's like she's probably going to win it. Then you have a super um, liberal president and then a more conservative president. They're all running. And so he talked about how the inflation rate in Argentina is 140%, and how a lot of his workers, like as soon as they get paid in the Argentinian peso, they have to convert their money into some real tangible asset very quickly. And so, yeah, it was pretty wild just hearing the story, and I'm hoping to have him on the channel. But as you can see here, they were 22% spiked up, 65 cents. Now they're back down to about 40 cents. So why the spike up? That's the question. Why the spike up? Which we're going to look into that now. So here we go. All right. So here's lithium prices. As you can see, the price of lithium has been um, dropping significantly. The stocks are way down. And, it's kind of like, okay, is this even an investment opportunity or what? 'Cause lithium has been getting killed. And we'll look at some of the stocks. So, I mean, is rhodium really back to, yeah, rhodium's back to $4,000. It's interesting. Yep. So, but we're focused on lithium. So lithium's back down to $22 a pound. And looking at this is the news that they received in this company. So they closes a US $90 million investment by Stellantis in ARS equivalent. So pretty much Stellantis, this is what the investor relations guy was telling me, was that they're going to write them checks to get them through this bear market because they want a stake in their project. So Stellantis is writing them the checks. Why is this bullish? So this is bullish because these junior companies, right, resource companies and such, like they have to raise capital. So this company has to raise capital, and then on top of that, they have to raise it in a way that doesn't dilute shareholders. So if they offer new shares to the market, that's how they dilute shareholders. But this company, Stellantis, is writing them checks to keep them afloat. So that means that shareholders don't have to worry about their shares losing value because the company coming online and offering new shares, which dilutes the price of the share, which dilutes the share, and the price of the shares go down significantly. So them closing this deal is showing that they're able to get the financial backing they need to keep afloat during the bear market. So, which that was pretty interesting. So that's the company I'm going to be looking into going forward. When we look at the lithium stocks, I mean, you could look at Lit, for example. I mean, this was almost $100 a share. Now it's trading at 48, clobbered. You can look at LAC, Lithium Americas. I mean, Lithium Americas, they were at what, $25 a share. Now they're at $7 a share. So they've been clobbered. Let's look at Piedmont Lithium. I mean, they were at close to $80 a share. Now they're at 27 a share, and they just been getting clobbered, right? So all of these lithium stocks are just getting freaking decimated. So that's like something that I'm looking into next. I see my guy Truth and Cjo said recession is coming later. Yep, it's coming for sure. America is going to pop like a balloon. Weimar Germany on that day. Americans will be in boats trying to make it to Mexico or Africa. Man, I don't know. Hopefully you got a boat that I can jump on with you, man. 400 million guns on the streets, America. We know that the day dollar pops, America will be in Afghanistan on steroids. Bretton Woods fleece America, 35 an ounce. We got bone big time. Things are bullish because government is injected $4 trillion into the economy every 6 months. So, yeah, appreciate your truth, and you're dropping some. All commodities will go up due to inflation. All fiat is coming to an end. World government around the corner. Yeah, I think all commodities are going to go up. I think that for world government around the corner, I mean, I don't put time predictions on anything. I'm also not huge into these ideas. I don't want to call them conspiracies. Some people call it conspiracy, but I think that there's some truth to them. However, I think that things will take longer. I mean, unless there's a major crisis where the government can enact some sort of power. I mean, they did, do that during the pandemic, but obviously certain things weren't in place, like CBDCs weren't in place, right? To where we could see that, I mean, but we did see like people lose their jobs if they didn't get a certain injection, things like that. So there was a definitely overreach in a lot of areas, especially with rights. So I don't think that it's not possible. You know what I mean? It is possible, and I think it will happen at some point. However, in the same token, I think that humanity is not that organized. I mean, because like when you think of a one world government, it's like, okay, what does this look like? You know what I'm saying? Like we can't even agree how to make a peanut butter and jelly sandwich. Like someone has their own cultural values, how they were brought up and such, and they're not going to agree with what someone else wants to do. You know what I'm saying? So I think there's going to be a lot of friction, and until all that friction is like navigated, unless there's like a massive war where like many people are wiped out, something of that nature, then I could see like a one world government coming to fruition. But I think that with these politicians and stuff, like it's so much division. I mean, and then that doesn't even get to like the countries, division between the countries, like because this country believes this way, this country believes that way, this country holds to those values, these values. You know what I'm saying? And then the country can't even like speak for its own citizens, like as much, like because the citizens may feel a different way. You know what I'm saying? There's just so many layers to like human minds, and I just don't think human minds are like very orchestrated enough to where like things can be planned and we agree 100% with everything that needs to go down. Like I just don't like, even with the IMF and the World Economic Forum, like I think that their plan is sinister. I think that it's very concerning. However, they would need like many people to be in the same mentality as them. You know what I'm saying? Like same mentality as them for them to carry this out, and I just don't think we have that right now. Not say that it won't happen in the future, but I think there's probably going to have to be some type of major crisis or something of that nature to bring us to that point. Um, a World War III could be that. You know what I'm saying? Like that could be that crisis that brings people to their knees, and then we, you know, then people succumb to the government or something. Like I could see something like that. So yeah. Um. So yeah, y'all. So I'm learning a lot here at the conference. Um. Be sure to. I mean, you all can still uh, purchase the live streams to see all of the presentations and stuff. So be sure to consider that. Um, I will drop the link in the description here below because you all can access this content here. So it's some good stuff. I mean, we've had Tavi Costa, Danielle DiMartino Booth coming. I think her and Lynn Alden are speaking Saturday. Um, we have uh, Peter Schiff. He's here. I met Peter Schiff. That was pretty interesting. He was taller than I thought. Um, Even when I met George Gammon, I had to stand up. So, hey, George, and you see how tall you are, just because you just never know. Like some people, you see them on camera and they may be shorter or way taller than what you thought. And you're like, man, I thought this person was taller than that. Some that's how I think. But yeah, so we have Tavi Costa, George Gammon, Peter Schiff, Lynn Alden, Rick Rule, Brent Cook, Brian Lundeen, Danielle DiMartino Booth, Dominic Frisbee, um, Constantine Kislin or something like that. So yeah, it's pretty good. It's very fun. A lot of Southern hospitality, a lot of there's a lot of music, Southern food. I'm eating a lot of Southern food that I need to slow down on. Has a lot of salt and things of that nature that I need to be careful for. Um, so yeah, it's a good time. I hope that more of you all can make it down next year. I am going to the Vancouver Resource Investment Conference, which will be in January. So it's a 2-day conference. It's free. However, you have to find your way out to Vancouver, BC for this. And this is what J. Martin in Cambridge House puts on. So I'll be there. And then Rick Rule Symposium is next year. I think it's July 7th through the 11th. So it's a lot of fun things. It's a lot of good opportunities. I got to process a lot of this stuff because there's a lot of information just being crammed in, just information crammed in, and you just got to take time to work through it and process. So, yeah, hope that you all do well. I will catch up with you all soon. It's 12 o'clock. I got to get up at 5:30, go to the gym, and then get ready for a couple of sessions in the morning and a couple of interviews for tomorrow. So y'all take care. Yeah, man, if you come, I'll be there. We got to hang out. I'm hanging out with a few people that watch the channel. It's people I met at the symposium that watch my channel, but I'm hanging out with them here. So it's pretty cool. So yeah. And truth hits like a bullet. Warren Buffett, a CIA asset who works for the House of Warbug. I don't know what you talking about, man. But I appreciate you being on here engaging. Maybe we got to do a Zoom call or something, and I can hear more of what you're talking about. Let's see, year and 90% of jobs. Where are you getting these dates from? Like, how are you saying this with certainty? Like 2060 and 2090. Like, how are you saying this with certainty? I'd like to know your sources and where you're getting these dates from. Like, are they just projections, or are they your predictions, or are they something you read somewhere? Is there some data that backs up like this year is going to be this time, blah, blah, blah? I mean, I understand like things like the fourth turning, they say like, it's every 4 generations, and generations can be 20 to 25 years. And um, so you can have time within that, which, Neil Howell is projecting like by 2030. So another 4 years, 7 years. No, another 7 years. Yeah. So, um, yeah. So what are you doing to get your data and these information? Um, so those at the top say Tavistock Institute, Council of 300, uh, Reuters. Okay. Yeah, send me some links. The Money Level Show at gmail.com. I read Reuters, so yeah, send me some links. And yep, agree to Cito, man. We got guns over here, man. I got multiple. Um, but yeah, you got to have community, and you got to have people and family and other people that know how to use them around you. So that's definitely a piece of it. All right, you all, take care. God bless.